All right. Well, we're here.
We're
We
here.
made it. Okay. So, a little bit about us. Mike and I were inspired to create a type of maybe an educational or a motivational real estate centered podcast. We're both very involved in real estate. I am a real estate broker. Michael's more of an investor. He has properties in several states. I'm licensed in several states. So we kind of just want to bring the idea that anyone can get involved in real estate who wants to. You know,
Right.
I guess we'll talk a little bit about why we got into it, how, things like that, what motivates us, and kind of go from there.
Yeah, absolutely. I think there's a lot of misconceptions, around real estate and what it takes to get in. The amount of money down, what it's like to be a landlord, the difficulties around it. And I think that the goal here is to just motivate people and to instill confidence in them to be able to, achieve financial freedom through real estate.
Yeah, because that's why I'm in it. And I can't speak for you, but I'm in it because I want financial freedom early. I think real estate is a great vehicle to take me there. I think it's possible through real estate. I'm still learning every day. I'm still a student to the game, we'll call it.
Absolutely.
Even though I've been in it since almost 10 years. And the biggest thing is, I think it comes with being bold and being brave. Some people are too scared they might think it's a gamble when really it's not. It's an investment. I think it's more of a gamble to leave your money sit in a bank account when inflation increases and your money actually decreases in value versus putting it into a piece of real property where appreciation exists.
I couldn't agree more. And I think that it's a mindset.
Yes.
I think when I got into real estate initially, I just got out of school. I was probably 2-3 years into my career. And it was actually my father-in-law. I was living in the building. I was living in an efficiency apartment, over in Beaver County. And he had said, do you want to buy this? I said, I don't know anything about real estate or being a landlord. I had terrible experiences with landlords, quite frankly, myself. So I'm like, that's the last thing I want to do is to be that. And I think that he gave me a nudge, and I ended up ultimately, buying the property off of him. And I read a book. I'm sure many viewers might have read it, Rich Dad, Poor Dad by Robert Kiyosaki. And I think that was the mental shift, away from, just really kind of the norm. It's going to college,
Yep.
You get a good job, that's how you're going to increase your income and your overall wealth was
Yeah.
through corporate America, which you very well can. You could do both.
Yeah.
I do both.
Yeah.
And I think that's the goal here for, our viewers is to be able to have that confidence and that mental shift.
That's
be
what
able
it
to have
is.
that-
You had to be
absolutely.
brave enough to want to take on that opportunity because that's what it was.
For sure.
You were living in this building, and it's a fourplex.
Correct.
So for people who don't know what a fourplex is, some people don't. It's 4 units, meaning there's 4 domiciles. There's 4 different places where people can have a kitchen, a living room, bathroom.
Correct.
Okay.
Correct.
So you're living in one of the units. There's 3 other ones, and are they occupied? Are they vacant?
So that building was actually, it's unique in that there's 2 efficiencies in the front and back. I was living in one of the efficiencies.
Okay. Now, what's an efficiency?
So efficiency really is you're not getting a bedroom. Your bedroom is your living room.
It's like a studio.
It's a
Okay.
studio,
Yeah.
right? So it's essentially a studio. So
Yeah.
really in that one you have one living space, a bathroom, and a kitchen,
Mm-hmm.
right? So when I bought it off him, there was opportunity because there were 2 basically gutted to the studs units. They were both, one was used as storage, one was nothing.
Yeah.
So, I was able to do that. I took out a construction loan at the time, so I was able to really, leverage the property against itself to help rehab and renovate it in both scenarios. And, ultimately it helped increase the value of the property and increase the cash flow. But, through that, I think that where you're going to develop that confidence is just going through the process. I've read many books, I've talked to many people, I have mentors, but it's just taking that step and having that faith and confidence in yourself.
Because no book or mentor is going to give you the full benefit of an experience.
Absolutely.
And
I couldn't agree more.
that's my biggest teacher is experience.
sure.
I've watched a lot of people. I've helped people get ushered into an opportunity, but because that was kind of like there, you were smart enough to realize you didn't know the full picture yet, but you were smart enough to realize, okay, there's an opportunity here. And now,
sure.
how many units do you have now?
So I have 30 units now.
30 units now, because you were brave enough to take that first step and acquire those 4.
Correct.
Do you still have those 4?
I do.
Yeah.
I do.
That's
Yeah.
pretty nuts. And also, just a side note, Michael is my number one client. He has purchased and sold the most units through me than any other of my clients. So
Yeah. Anyone looking for a buyer's or seller's agent, this is the girl
is me.
right here.
Yes, in Pittsburgh. Well, actually, PA, Cali, and Florida. But anyway, so I'm an investor myself.
Mm-hmm.
I don't have 30 yet. I'm more of a flipper. So I'm more of like a fast cash person. I do have 3 rentals. I have 3 single families. I bought my first investment property. I was 24, and it was, I think, $7,000.
Yeah.
And it's in Union Township.
Okay.
And it was, so the market was way different back in 2015. Where it wasn't as real estate wasn't as in demand as it is now. Mm-hmm. So to buy a house for $7,000 in the city of Newcastle was not unheard of.
Right.
The cheapest house I've ever sold was $4,000. It was a duplex.
It's unbelievable.
On the south side. I mean, anyway, I could say something about that, but I'm not going to.
Yeah.
So I bought this house for a single family house. It was a 2-bedroom, 2-story for $7,000, and I still have it today. And I mean, I own it free and clear, and it makes me $700 a month. So like the return is crazy. Yeah, right. It's
You're
like
not getting that in any other market.
I mean, right? The cash on cash return and the percentage return is what most people look for when they're building a portfolio.
For sure.
So I have 3 of those, like just 3 cheap little houses. My living situation is kind of weird where I have a single family house I live in, but I also live in a condo that I'm exploring the short-term rental world. And you're familiar with that, and I want to discuss that a little bit. And one thing I want to touch on as well during this podcast is you talked about leveraging a construction loan. Mm-hmm. And the key, I think, and I could be wrong, to you being able to build the real estate portfolio that you have is knowing how to leverage money.
Correct.
And that takes experience and knowledge. So I want to dive into that as well. So how did you learn about a construction loan?
So the construction loan I learned about, it's unique that was my first purchase, because there were so many different moving parts and components to it,
Right.
You would think that you would just, in order to get that, you would just be able to, go to the bank, tell them that you want to do renovations, and, they'll give you a certain amount of money, with a term and a rate, and, you're on your way. But it very much so depends on the market that you're in, what the comps look like. So really, you're going to do it. There's a pre-renovation appraisal, and they'll do a post-renovation appraisal. Okay, so, and then they'll allow you to borrow a percentage of that, and then there'll be installments or phases in which they're going to disperse funds to you.
Okay, so it's like a draw.
So you're going to get a draw.
Okay.
Right. So, ultimately it's a great way to be able to, save your cash, to help expand your portfolio. Mm-hmm. And you're using someone else's money, at the end of the day.
That's the best way to do it.
The name of the game. It is.
Money is so cheap to borrow right now. People are like, my God, the interest rate is 4%. I'm like, when I started, I mean, it was like an average interest rate was 7 to 8%. Mm-hmm. And then, the vets tell me, it was like putting a house on a credit card because interest rates back in the 90s or 80s or whatever, I wasn't in the game then, was like 12 to 15%.
Yeah. Right.
Which is crazy.
Yeah.
So if you can get something, around under 5, you're doing fine in terms of like borrowing. But I mean, you would just have to be conscientious of the markets and when to refi, because I know that you were able to take advantage of that when we had that surplus of appreciation.
Right.
So, sorry. Okay. So the construction loan, did you have to put 20% down?
I did.
Okay.
I did. Yeah. So, it was a unique situation, and it went into my decision to ultimately purchase it based on what the agreed upon price was and where the market was in the comps, where I thought that they were going to ultimately be. So I was actually able to make that purchase and use equity towards the down payment. So there was based on the current the appraisal as is, and so I was able to use some of that money in the construction. The construction loan didn't cover all of it. Okay, so I had to come out of pocket with really the money that I didn't use towards the down payment. I was able to use towards, some of the rehab.
Interesting. Okay.
Yeah, so it was a unique situation.
Yeah, sure. This is kind of reminding me of our latest deal with what you negotiate on Sheridan.
Oh yeah,
that's your last 2 deals that we closed on were home runs, like ridiculous returns. and someone handed you a check for $7,000 at closing. I mean, that's insane.
Yeah, no, at the end of the day, I think that there's, it depends on what you're looking for. You know? I think that people get caught up, including myself. I think that if you're going to have a diversified, you have a diversified portfolio, some assets, some properties are going to be more cash flow heavy. Some you might net a little bit less, but you're going to hit appreciation a little bit heavy.
Yeah.
Ideally, you want to get both, right?
Right.
In a market like Newcastle, for example, or even like I'm in Beaver County, so Beaver Falls, you might not necessarily, those markets might not appreciate as much, but that's ultimately where your wealth is going to grow.
That's a cash flow market.
Right. So you're going to be able to use those markets to generate enough cash flow to ultimately come up with the money to put down.
Yes.
And I've kind of come out of my comfort zone a little bit more to realize that if you're in better markets, you might net a little bit less, but they're going to appreciate quicker. And then you're going to be able to leverage those properties and ultimately take funds out of those properties to be able to expand your portfolio.
Because that's what happened in Beaver on
That's what
Canal
I was able to
Street.
ultimately do, right.
Yeah, it's timing too.
It's everything.
It's also like people are like, oh, did I miss the boat? And I'm like, no, because markets are cyclical. As long as you get in now, you can figure out how to ride a wave. You know, people are like, oh, the housing market's going to crash. I'm like, I hope so.
Yeah,
for several reasons, because that's when you buy.
Right.
Like that's when you get everything for a better price. And even as an agent, that's when you get rid of all the agents, because it's real trendy to be a real estate agent right now. I mean, how many agents do you know now? I mean, since
everyone wants to be an agent.
Everyone's an agent. They're, everyone's uncle, sister, cousin.
Real estate's the shiny object on a hill right now.
It's like, but that doesn't mean they're an expert. But I don't want to veer over to that. But I hope, when I started. So I got my license in 2013. I was an assistant to a broker for all of 2012. So that was after the infamous crash of 2008. But foreclosures don't happen that fast and hit the market. So it takes a couple years for, unfortunately, it was devastating what happened in 2008. But that was kind of like the market I got introduced to, which was distressed properties.
Sure.
And I watched a lot of people become very wealthy taking advantage of the distressed market. And that can be a bankruptcy, a foreclosure, a sheriff sale. Right. But there's a lot of awareness you have to have when purchasing a distressed property. There's a lot of, your guy on Sheridan. Oh, my God. That's an infamous property. We might have to take time for a whole episode on Sheridan.
Oh, really?
Just to talk about...
Yeah, that was a real beauty walking into that one.
Well, the guy the amount of liens he has on that property, and then how you bought it.
Yeah,
but I was on a wave. So, I got into it 2013, distressed properties, foreclosures, but it was crazy opportunity. Like, I wish I would have purchased more. I couldn't afford it back then, but now, when I invested back then in my cheap little houses, they gave me enough cash flow to buy eventually, like my condo in the Berg, and then now I'm moving on to I'm getting my feet wet in the Tampa market.
Right.
And you just bought near Tampa in Madeira. I say just, but that was what, last year?
Yes, that was last year. It was quite a learning experience with that.
Yeah.
Supposed to close last March. Ended up closing in August. Learned a lot, again, especially on the financing side of things.
Yeah, and a pandemic doesn't
pandemic doesn't help anything.
Yeah.
No, of course not. But so tell me about that. I mean, what are your goals down in the Florida market? I know you said you're looking for.
Yeah, so I mean, it's a trend. Florida is a trend right now, in all avenues of life, with just the lack of restrictions as opposed, compared to the rest of the country, and the opportunity. And I want a vacation home for myself. I think I deserve it, at this point. But if I can justify that second home, that vacation home to escape to and make money off of it, is my ultimate goal. I talk to you, I talk to our other friends that have crazy returns on properties like that. And I think it's kind of stupid I'm not involved in it yet. And I get the same reservations. Did I miss the boat? And it's like, no, I'm going to miss it if I don't jump in there and buy this soon enough, because of a loan product we were mentioning out in the lobby, the second home opportunity, the second home loan product. What's it called? Just second home?
What, just the second home, Fannie Mae second home?
Fannie Mae second home. Yeah. So I'm not an expert on it. You have obviously had experience with buying a property with one, right?
Correct.
and it's 10% down on a second home. And what's the average interest rate on a second home?
It varies. Right now, it was around 3.25.
Okay.
Which is crazy.
That's crazy
stupid
cheap.
Low. It is. I when I bought in Ocean City, Maryland, was it probably about 5-6 years ago? It was around 5.
Okay.
So that's a huge difference here, almost 2 points.
Yeah, I mean that influenced. That was a stimulus when the Fed dropped the rate. It was a huge stimulus as to why the housing market boomed.
Right.
Because money was cheaper, appreciation was crazy. People were able to cash out refis. My lenders were so booked with cash out refis that they couldn't handle my first home buyers, my first time home buyers. Anyway, do you want to dive into numbers, like what you built your condo for, the price, what you're getting per night, and how much it's worth now, or do you not want to get that personal?
No, I could definitely get personal. I think it's important to put into context, when it comes to short-term rentals. I think that it's not as much money down as you would think, being the 10%, and being that it's new construction condo, there's different guidelines and criteria that, builders have to follow, I
learned about the purse addendum.
Yeah, that's a real,
I don't know why I remembered it, but
right.
you told me about that.
Yeah, so it's regardless of what market it is, the Airbnb and Verbo Motto are definitely they've been taken off. People are starting to realize that, I'm gonna, especially in with this still very much so pandemic lifestyle that we all live in, where people can work from home. I think that's going to be something that continues on into the future, and they could live wherever they want and still keep their job. And so if they want to live, in Florida, and be in 70-degree weather right now instead of 5, ideally they can do that. And the returns there, are just, it's crazy, to think of. The nightly rate down there is around $550 to $600 a night. So people are, but 10 people could stay there. Whereas like if they're staying at Cambria Suites, 2 to 4 max are going to stay there and they're spending $300 to $400 a night. So you're still kind of undercutting the market a little bit, but I don't want to get ahead of ourselves in this regard. That I think that for people that are trying to just get into it,
interesting. Okay.
I think that it's how do I get to that point?
Okay, so we want to backtrack.
How do I buy my first duplex or 3-4 unit property?
Okay, so like where I started, which was my first little house for $7,000, and where you started, which was your 4 unit. So how do we do that? How do we take somebody by the hand and do that? Because mine's a cash purchase.
Right. So, and I think that that's one of the biggest misconceptions is that people think that, I got to spend I got to put 25% down. I don't even own a home yet. How am I going to be able to afford, to buy this property?
Right.
Because
I bought my first house when I still lived at home. I didn't live in the rental.
That's right.
I had that luxury, but my first house that I purchased to live in, I put 3.5% down. I took advantage of FHA.
Right.
So, FHA is contrary to popular belief of, needing 20% down to buy your first house. You don't need 20% down at all. There's programs, it's a USDA loan, 0% down, 100% financing.
Loans,
if you're a veteran, VA is 100%.
Some lenders will do conventional loan products for sub 10% as well.
Really?
If they're on owner-occupied properties, And I think that's the thing. A lot of the people that I've followed over the years, they really have house hacked. And some people that I talk to and mentor, for this, I have a really good friend that, he's been renting, a house for years. He's never owned a home, and and I had encouraged him, as I encourage everyone, because that was one of my biggest regrets. I wish that I bought my first property I bought after I had bought my house in Beaver.
Yeah.
So I wish that I had done what I am trying to advise people to do. And
do it sooner.
Do it sooner, because I could have bought that property.
Yeah.
Even if it wasn't that one, I could have bought any multi-unit for 3.5% down.
Literally, you can buy a multi-unit. You can buy an investment property for 3.5% down. I just helped one of our friends from Newcastle buy one in Newcastle, a triplex, FHA.
FHA, you're coming out of pocket.
That's insane.
You're coming out of pocket with $6,000-$7,000.
And you can make it back in how many months?
You're making it back, yeah. Right.
And
He'll be
then
whole
you do it again.
He'll be whole in probably 7 or 8 months based on the
Yeah.
cash flow, if not sooner,
Yeah.
quite frankly. And then you could do it again. You put a little bit of money into it, you renovate it, especially the market, depending on what the comps are, which it's all market. You know, at the end of the day, that's why I will encourage people to do their due diligence. You know, you have to understand market analysis and understand what the numbers are, because not every property makes sense just because just because the price might fit your budget.
Yeah.
You know, because if you're going to buy something FHA, I do encourage people to do it in markets where the comps are higher.
Yeah.
Just because you could do the FHA, put a little bit of money into it, renovate, paint, floors, carpet, that sort of stuff. And then, you know, you could try to refinance it based on what that is. And next thing you know, you're beyond that 80% loan to value, and you're able to, you know, take that money out of it and then buy something else with it, or move. And you're out of that FHA product, which for viewers that don't know, you could only have one FHA loan. Okay, so ideally, you want to be in a position where you could refinance and be at 80% loan to value, which is essentially 20% down. Okay, and then you could, guess what? You could move, and you could go into a 4-unit, 6-unit, 6% or 3.5% down.
Right.
You're living in that one. You do it. You know, you just continue to do it.
Yeah,
trickle effect.
It's true. It's like get into it sooner than later, because so I'm 31. I think, how old are you? 30?
I'm 31.
Okay, so we're both 31, and this is our money making years, right?
It is.
So
Your 30s.
you be aggressive. You invest aggressively. You this is not the time to keep your money in a PNC bank account making 0.01%.
Right, with inflation right now, you're
losing
hammered.
money.
Yeah,
It's worth less. I think you put money in, it's worth less than it was last month.
Immediately, it is.
So you got to put it into something else. I don't know about crypto or stocks. It's not my lane. I know about real estate.
Right.
Which is why last year I bought 3 homes.
Okay.
I bought 3 homes to flip. I bought it with a partner, and our agreement is it's kind of perfect. You know, I put up the cash, he puts up, you know, half, and then we have a contractor who gets a cut at the end, so he doesn't charge us up front.
Okay.
So with our liquid, we're able to, you know, secure multiple properties at once. One in Lawrenceville, one in Newcastle. It's closing the first one's closing next week.
Awesome. Congrats.
And then
That's great.
thanks. And then there's 2 in Newcastle. 2 in Newcastle, 1 in Lawrenceville. But anyway.
So were those off-market deals?
Yeah.
So they were off-market. They weren't on the MLS. Okay. So you were able to find those. And how did you go about that? Because I would imagine some people, they might not want to be a landlord.
Yeah.
You know, so they might just think, you know what, I'll do 1 or 2, you know, flips a year.
Yeah.
You know, so maybe get into what does that look like in terms of
so
trying to find properties?
the key is a contractor, which is the hardest thing to acquire. I mean,
Sure.
I'm sure you can attest to that, trying to fix 30 properties.
Yeah,
you know what
that's,
I mean?
Yeah.
So having the relationship with giving the contractor interest helps with timing, priority, and quality of work.
Sure, absolutely.
So he was able to fix the one in Newcastle with under 3 months. I put it on the market, and it appraised for $25,000 less than what we listed it when we agreed to.
Okay.
So we'd terminate. This appraiser sucked. And I can go into how much I can't stand appraisers.
Oh yeah, that's a whole segment.
I lie. I love appraisers. Please, if you appraise my property, like you're the best.
If you're an
never
appraiser
mind.
listening, yeah, right.
Unless you're listening, yeah. But so then we had to terminate. But then I got a cash offer. Crazy enough, cash offers are happening.
Yeah.
But we ended up selling at list price with cash.
That's amazing.
Which is BS because the first buyer should have had it, but the appraiser sucked. Anyway.
Sure.
So he was able to bang out that flip within 3 months. Now I'll have my cash. I'll have my check on Friday. And now I'm like, I can't hold on to this. Like it's burning in my hands. Like I have to go buy something else.
Yeah.
They were all off market. I found them through wholesalers.
Okay.
And the one was actually my relatives. They were like, we don't want this anymore. Do you want to sell it? I'm like, no, I'll just buy it and flip it. So, but there was a margin. I think we bought it for the one I flipped in Newcastle on Sheridan. We bought for $47,000.
Okay.
I sold for $160,000.
Wow. Okay.
Yeah.
So how are you doing, like budget wise? I mean, what is it that you're looking for? I mean, because obviously, you know, it's market dependent. You know, Lawrenceville's not Newcastle, so you know, in Lawrenceville, the expectation is that right, you're gonna have to be a little bit more higher end there.
Right.
You know, you don't want to get in over your heels in terms of, I would imagine, you know, the total rehab in a market like a
yeah, he kind of goes, well, the contractor
do
does great work, so he kind of goes off the rails. We have to, like, keep him, like,
yeah,
like
right.
you're not living here, Dave. Like, just chill out. He still does beautiful work. It's kind of just like I am my own guide. Like we all have our own roles.
Sure.
So like I created the layout, I picked out the colors, the design. It was kind of like just my experience and kind of using that as an influence to create the bigger picture, which was eventually selling it.
Mm-hmm.
And obviously when I sell it, I don't charge myself. So they save on
That's a bonus
commission.
Yeah, absolutely.
And I have buyers already in my arsenal because of being in the business. And Dave has his construction side, and then our other partner, he just adds the cash to it. But so to come up with we're kind of like Wild Westing it. We don't really have an itemized list. We're just so familiar with the game, like we can gauge it.
Sure.
So we put in my return on that is almost a 50% return.
Wow, that's fantastic.
Yeah, and that's like in 6 months.
Yeah.
So if it would have just sat in a bank account, I would have lost money.
You would have lost money.
So now I have another opportunity at hand next Friday, and I'm not going to keep that. I want to take it and bring it to Tampa with me. That's what I'm going to do.
There you go.
The one it's not like crazy numbers either. The one I bought off my cousins was a $15,000 house.
Yeah.
But we're putting like a brand new bathroom, brand new kitchen in it. It'll sell for $80,000.
Right. Yeah, you can't.
So
beat
it's
that.
not like
Yeah.
I'm working with astronomical, crazy numbers. Like it's totally doable. It's knowing what to look for.
Right.
If that makes sense.
Absolutely, and that's the misconception.
Yeah.
Right? Everyone thinks that. Well, to get into real estate, you have to have
millions of dollars,
tens and tens of thousands of dollars, hundreds of it couldn't be any more far from the truth.
Yeah.
And I think that and that comes down to mindset.
Mm-hmm.
And,
yes.
And it really is. It's what type of life do you want to live?
Mm-hmm.
And that's what the book Rich Dad Poor Dad's about. Is everything that society says is successful or equates to success.
Mm-hmm.
Okay, I'm going to graduate from high school. I'm going to go to college. I'm going to get my master's degree. I'm going to buy a big house. I'm going to really leverage myself to the max.
Yeah.
Settle down. Have all
go
these
vacation twice a year at that.
Right.
That's once a year.
Once a year.
Yeah.
Once a year. And which is, don't get me wrong, it's a great life.
Yeah, I'm not knocking anybody for doing it.
But if
I don't want that.
But that was what he had referred to as his as a poor dad, right?
Yeah. Oh.
Whereas the rich
I've never
dad,
read it, so I don't know.
Oh, you didn't? Oh, I encourage you to read it.
Yeah.
Where the rich dad was, was the son. I don't even think he might have. I don't even know if he graduated high school. And I'm not telling anyone not to graduate high school.
Yeah.
But I know he didn't graduate college.
Yeah.
But he opened up businesses. He bought real estate. He bought land. He bought cash flow producing assets.
Okay.
Which ended up he didn't have to go into corporate America. He didn't have to worry about getting laid off. He didn't have to worry about having a boss. He was his own boss.
Mm-hmm.
And ultimately he was able to generate and grow his wealth, way quicker than the poor dad was. And I think that again, it comes down to that was my breaking point. It's like,
Got it.
I was my previous company, I'm in pharmaceutical sales,
Yeah.
right? And it's a really volatile space to be in. You never know year to year what it is. Really,
I can imagine it's very cutthroat being in sales.
We say we're on a 1-year contract every year.
Interesting.
Right?
Okay.
And so the reality is I went through a layoff. I didn't get laid off, fortunately, but I had a really good friend that got laid off from the company, and it made me realize, how corporate America can be, and so I wanted to really set myself up to be independent of that,
Mm-hmm.
to where my financial situation isn't predicated on, decisions that or ultimately C-suite's making, and so I think that real estate is the best vehicle and best tool to grow your wealth, grow your passive income to the point that, hey, I don't have to ultimately work for a big corporation anymore.
No,
you're proof of that as well. You got into it, at a younger age, you've been very successful, and I think that ultimately it's paying dividends right now for you.
Totally. I couldn't see myself going to grad school because that was like, I was the first person to graduate college in my family, and it was like, all right, Anna's going to be the doctor. Like that's Anna's. Like they were banking on Anna. Yeah. You know what I mean? And I was like, I don't like academia at all. I want to. I'm an entrepreneur. I've always been an entrepreneurial spirit. Like I want to do businesses. Like I want to make my own money, and I don't want to stop at 5 p.m.
Sure. Right.
So I was very lucky that I was inspired to go into real estate at 21. Like that's like, you know, I feel like everyone got interested, piqued their interest later on.
How did you get into that? What made you make that change? You know, like, was there a breaking point, or was there like?
Well, so my dad owned 10 rentals when I was younger, and he's a contractor, and I've always watched him like I knew like in the background like there was tenancy to go like collect rent from, or there was an issue you had to go fix, like there was a leak or something, you know. So it was always like that was just a thing in the back of my mind.
That didn't deter you, or what did you know?
No,
okay,
it didn't, because
intrigued you then.
It intrigued me.
Okay.
And I was like, oh, and I always loved the game Monopoly. You know what I mean? It's like, okay, you keep pass and go, you keep collecting rent, but you know, just when you're young and childish, it's like that concept, like, okay, how do I make this money quick?
Sure.
And after I graduated college, I have a bachelor's in biology, and I was just a bartender, and I just couldn't. I didn't want to go to grad school, and I was bartending, and it's a very social job, and you meet people who are in real estate. And I'm like, hey, I want to make some more cash. Can I be your assistant? Bam. I learned the contracts. I see the checks. That's what inspired me. I was a broke college student, and I'm seeing somebody get paid, 4 digits for 2 hours of work.
Yeah.
I'm like, sign me up. And at first, I was embarrassed to tell people I was a real estate agent.
Really?
Yeah. I was very, because I
remember when you got into it.
Yeah, I was bartending, and I remember like someone came in. I'll tell you who after. But she came in and was like, did you just graduate college? And I was like, yeah, but I'm like in real estate now. And she's like, oh, okay. Like she was like,
see, that's
she
that
made me
mindset.
feel stupid. Yeah.
But that's that mindset, that there's this expectation that, that you go through a certain path.
Yeah.
And if you don't do that, in your case, people say, oh, why are you doing that?
I was so timid. I was so
sure.
Yeah, I sell
But
houses.
now you were obviously ahead of the curve, because now everybody wants to
be an agent. Everybody wants to own property. And I mean, how many DMs do you get a week? Like, how do you do? What do I do? Like, mine's like, can I be an agent? Can I work with you? And I'm like, oh, yes, but this is what I've had this conversation how many times? Like, get your license. This is what you do. Wait, it's commission only? I'm like, yeah, you have to, grind.
You got to be type A. You got to want to go do it.
You have to be type. It's not like instant gratification. Like,
no, and that's what a lot of people, any fad, you have the Bitcoin and, the crypto phase, and, obviously over COVID, where there are multiple different investing platforms with Robinhood,
NFTs,
and SoFi, and NFT. So people, are onto that next best thing, and the reality is real estate is one of those, that's it. It's forever, and
there's so many facets to it.
There is, and that's what makes it so remarkable. That's why I encourage people. So when people do DM me, when I have time, I try to help them and encourage them to educate themselves, to talk to people.
Yeah.
You got to be able to walk before you can run. It's a marathon. It's not a sprint.
Totally.
And a lot of people think that, well, I'm going to buy this property, I'm going to totally change my life.
It will change. Yeah.
Yeah, it's going to change. Like later tonight, I got to go thaw out a frozen pipe.
Really?
So, yeah, I do.
Oh God.
I do. And so, but at the end of the day, it creates that freedom, to down the line, and it can create generational wealth.
Like we can, like if you wanted to right now, you could just fly to your condo in Florida, right?
I could.
At 31. So it's like, come on, like this isn't normal, at least not for like my parents' generation.
It's not, but
they think I'm crazy with all this stuff. They're like, what are you doing now? Like they're like still like, first of all, they were pissed when I got my real estate license.
But you didn't, the key is that, and I think that you didn't start out with money.
No.
Yeah, I didn't
come from a family with money. It was me save my communion money.
Right. And so when you got out of school, with me, I got out of school, I had over $100,000 in student loan debt, and it was over what you feel like you're
ridiculous.
Swamped. I was working a full-time job at GNC at Beaver Valley Mall and at the airport.
Yeah.
I think that I made like $19,000, which by all standards, in terms of a college student was great. I was able to pay my rent. I was able to put food on the table. And so, but, at the end of the day, I didn't have money when I got out. No. I was fortunate and blessed to get a full-time job, and get into medical sales, but which allowed me to definitely scale. Mm-hmm. But the first step, I think, is really, looking yourself in the mirror and asking yourself, what type of What type of life do you want to live?
What do I want to create
What
for
do you
myself?
want? What do you want to create for your kids? What do you want to create, for your family? You know, do you want to wait until you're 59 and a half to start pulling from an IRA account?
Yeah.
Do you want to be working until you're 70?
Yeah.
Waiting for Social Security, which probably for our generation is never going to be
It's
there.
not going to happen.
It's never going to happen. So, like it's mindset. What do you want? You know, and if that's what you want, know, and you think it's for you, go for it.
Yeah.
If you want to be part of it but you don't want to take those phone calls, when they come in from tenants, there's different ways that you're able to invest. And I think that you have some relationships with some hard money lenders, people.
Oh,
that are,
yeah. Well, you don't have to go to traditional financing. You can get a private mortgage. The interest rates might be higher, but you don't have to have that debt recorded.
You don't have to meet the government's guidelines.
Exactly. Right? There's ways around everything. And I think that's what we want to create with this space is obviously I always say, like, your net worth is your network. So I want to use I want to use this platform to create a bigger network with people who are in real estate. So eventually have questions coming in, guiding people on how to create their own real estate opportunities. Is this an opportunity? What they need to look out for, because we're getting inundated with questions anyway. So we might as well make a funnel and a safe space to where people can come and do that.
Sure, absolutely. And I think that's the goal here. Is to help people achieve financial freedom through real estate. And to help people instill the confidence in people that, it all starts with one step. Yeah. And you're not going to regret it.
No, not at all. And there's people who have had like nightmare stuff happen.
But it happens.
But you have to have guidance. Like there's preventative maintenance that can occur.
It is.
Like vet tenants out. Like there's ways to make sure that you don't have crazy tenants. There's ways to make sure, you have crazy tenants. I have gone to enough eviction court to know how it works and how to vet. Like I can kind of see who's going to be a problem and who's not. Thankfully, like my tenants have not been issues in the 3 rentals I have, but
it's also rewarding, not even from a financial perspective. It's rewarding, working with people, and because you're really providing shelter, a roof over their head.
Yeah.
And to try to, and you really, it puts life into perspective. You see all walks of life.
Yeah.
Depending on the market that you're in, right? You're down in Tampa, you're running an Airbnb, you're dealing with really a lot of the top, 1%ers, maybe not top 1%, but
people with disposable income, higher middle class.
For sure. And I think that it keeps you level, and it keeps you hungry.
Yeah.
Ultimately I think that it's a game changer.
Yeah.
And I think it's important to recognize that we're both from
Newcastle,
middle income America. Yeah. Rust Belt, and
the
it's
Rust Belt.
the Rust Belt and the Snow Belt. Yeah.
Yeah.
Right. And I think that, if we're able to do that, anyone can do that.
Yeah. Like drive through our town. Like it is, it's what would you call it? Like not desperate. What do they call it? Depressed. It's a depressed area.
It is. It is, but there's a lot of hardworking people there. And I think that there's people that want more, but they feel like they're bound by their circumstances. And I think that if I could express or convey any message to them, it's that, you're not, everybody can do that. Even if, and we'll touch base on a lot of the specifics later in later episodes, but even if you don't have, the best job in the world, but maybe you have some money in the bank. There's good credit. There's loan products that are out there that aren't government. Fannie Mae backed. You have to follow their guidelines. You're able to do that based on your credit score and based on your bank statements. And ultimately,
they do bank statement only loans.
They do, and I think that, and again, then you get one property. Maybe that property you're netting, $800 a month, $1,000 a month. Well, that's $12,000 a year that you're able to add towards your your tax statement, at the end of the year, and then it's a trickle effect. You use that $12,000 that you made.
Yeah.
Maybe you buy something else at a FHA that you're coming out of pocket 6-7%. Add $12,000 to that, and again, maybe you have a goal of 1 property a year. Maybe you just want 1 or 2 properties and you want to give it to your kids, Yeah. I mean, at the end of the day, it's thinking differently.
Yes, that's, like you said, it all comes down to mindset. If anything, I think that's the biggest thing, is not being afraid to experiment with what can I actually use that's available. So like when you were talking, I wanted to brush on like LLCs. Like, why do you buy your properties in a limited liability company? What's that do for you?
I mean, it's a shelter, you know, it is, you know, I mean, I have a job with, you know, with a retirement with a 401k, for example, you know, I have different properties, which I've started to, you know, put under different LLCs, right? Because at the end of the day, you know, things happen. You know, things happen, you know, at these properties. If somebody falls, I don't want to be attacked personally for that.
Yeah.
You know, I mean, that's my own shelter for that. So, you know, I'm the only managing member of the LLCs, you know, so obviously that's going to be reflective on my tax return, but I'm able to file still, you know, as one. I don't have to file separately.
Does your LLC allow bigger write-offs because you buy and sell through an investment
They absolutely
company?
do.
Okay.
Yeah. And,
that's like the main vehicle. It's a vehicle.
It is, yeah.
It's a tax vehicle.
Tax vehicle.
Yeah.
You know, and so you're ultimately able to, you know, benefit from that.
Listen,
in terms of taxes.
and here's the thing: the IRS created these games.
They did, you know, and at the end of the day,
you're just taking advantage of the rules.
I'm taking advantage of what it is.
Yeah,
you know,
that's
just
all.
Just like anyone else is.
That's
know?
my favorite thing is to talk about, because I'm 1099, I'm commission only, and then I have my investment income. So write-offs are necessary unless I want to like never spend any of my money, because I will get taxed out the wazoo. So
yeah.
So it's like we didn't write these rules. That's why you have an accountant that teaches you what they are.
Right. Yeah. That's part of the and you know, and I think that again, one of those things we talked about in terms of where do you start? You know, again, it's the mindset education, talking to people. You have to develop a team.
Yeah,
you know?
You do.
Team,
lawyer,
so
number one.
Yeah, maybe get into who's part of that team. Obviously a lawyer.
Yeah.
You know, you have a good accountant, right? A good realtor.
Contractors,
Realtors, yeah.
Yep.
You know,
that is
and
so
your mentor's
true.
part of that. You know,
yeah.
You have to find somebody that you could, you know, bounce things off of.
Another thing too, like, and we do this a lot, it's brainstorming.
It is.
Yeah, because you told me about, I don't know if we can cut this out if it's no, like before you file for taxes.
Oh yeah. No, hey, this is part of the tax. I mean, that was the whole thing with in Florida. It's, you know, look, like I'm W-2.
Some lenders are able to do it, some can't.
Yeah, and
lenders are regulated by a governing body, just like I am regulated by the commission. I don't know who they're regulated by.
They are, and you know, and I think that you know, they want you to be within a certain criteria of DTI. For those of you that don't know, it's debt to income. You know, and I think that I've been able to get financing for all these properties, you know, based on my W-2 income. But if your W-2 income isn't high enough, you know, for whether you're trying to buy your first property and your W-2 income is not high enough, you know, or you've reached the Fannie Mae max of 10, right? You could take loan products that, like you had mentioned, that are bank statements, credit reports, non-conforming loans are what they essentially are.
Yeah.
And, you know, so you don't have to worry about the DTI requirement.
Right. Yeah, that's what I have to do because of just the way.
Well, and to answer your question, you kind of finagle, how many write-offs do I want to take? You know, so for me, it was, okay, I have, you know, all these different properties, you know, so ultimately it's how much rental income do I want to show? How many write-offs do I want to take? You know, maybe that renovation that I did, I don't want to take that because I need to show that amount of rental income in order to be able to get approval for X amount of properties that I plan on buying.
Interesting. So it's kind of like a math problem. It's like, where does it make sense?
It's one big equation, and there's certain different deductions that could be added back in.
Yeah.
You know, like mortgage interest and so on. You know.
Yeah. Well, they changed that in 2019, I think.
What, where you could add back mortgage interest into your DTI?
On investment properties, I think they cut it. They limited it to $10,000. Was it $10,000? I'll have to look. I know.
Yeah, I know that they were able to add. That was one of the ways that we were able to get that deal done. You know, through different things.
So it's really just how beneficial is it? Should I, you know, take the write off? Because so say you write something up for $10,000. It doesn't always equate to $10,000 you don't have to pay.
Correct.
Right. So it's like the math problem is how much do I want to claim that I made, so I can borrow X amount of dollars.
Right.
And that's beneficial when the interest rate is lower.
Based on the DTI component of it.
So when you get when they qualify you, do they just only look at your LLC's income? or in the debt attached to it, or is it a whole picture?
No, they're going to look at everything.
Okay.
Based on that. Now, if you could get into the S corps and Cs, and you could get into the different other the other different shelters that you have there. But for the LLC, for me, it's everything that's attached essentially to my credit report. So when they pull my credit,
because you're the sole.
Because I'm the sole proprietor, I'm the owner of the LLC, so they're gonna everything falls under me.
Okay.
So they're gonna look at every single property, every single debt, car, whatever it is, and they're gonna say, okay, this is your overall debt, okay, and your monthly obligations, and then they're gonna say, all right, this is your income, and so if it's over 50% or at 50%, you're not getting approved,
right?
But if you're under that threshold, then you're good. So that's that math problem come tax time, to try to figure out, okay, what do I need to do? So, and I ran that by, my mortgage broker, to where, okay, what do I need to show? And my CPA, what do I need to show to be able to get approved for X amount of money this year?
Yeah, they almost work in conjunction, the lender and
They did.
The accountant.
Yeah, they were going back and forth, and and that's exactly what had to happen in order to get it done.
Yeah. I just want to go shopping for a multi-unit right now. I just want to go find one.
Me too. Yeah. Good luck finding
Do
one
you?
right now.
Do you want to go buy one?
I do. I absolutely do.
Perfect. Where are you looking now?
So obviously I have the rehab in Bellevue right now, but the deal in Ocean City fell through. As I had mentioned to you.
Why did it fall through?
Underappraised.
By how much?
$56,000. Do
you think your appraiser did you a favor?
Probably.
Okay.
Because I have an emotional attachment to Ocean City anyways, but I knew what the numbers are everything. If the numbers if it makes sense, if it's in a good market, I'm going to buy it.
Okay.
But, the sellers had an emotional attachment. They really didn't want to sell it. They felt like the value was where it was. And I truthfully, I thought the value was where it was too, but guess what? It doesn't matter what I think the value is, matters what the lender thinks the value is.
Right.
And based on the appraiser. So I'm looking into other markets right now. I'd probably buy something else in Florida, as you and I have talked about.
Yeah.
What about you?
As far as what, investments?
Where are you looking at? What's your next move?
I want to buy one in Pittsburgh just because I'm here, but
multi-unit.
I want a multi,
okay.
and I just want to, it's kind of I want to take a chunk of money, put it down, a down payment, have the multi, pay that off, get my return, my cash on cash return. To zero, buy it. I buy another one, just not touch that money for years.
Sure.
I want one to pay off the other one.
So what percentage are you typically looking at then?
To put down?
Not even put down.
A return?
What is a percentage on cash that you're looking at?
I mean,
it varies across the board.
Yeah, rule of thumb, I've seen most investors want it a 8 to 9% annually.
Yeah.
That's rule of thumb.
Yeah. Which is typically what you'll get in Pittsburgh.
Here.
In the city. Allegheny County, based on the pricing.
I'm an off-market buyer too.
That's true.
I've never bought anything from a realtor.
I need to be. Well, you would probably be upset with me if I did.
Yes, I would. But it's not on purpose either. It's just when you see an opportunity and it slaps you in the face, you're like, all right, I'm gonna buy this. I'm gonna make it work. I didn't plan on buying 3 houses. It just was there.
Yeah. Right.
Just because I was, in the game. So I work with a lot of property management companies who are looking to liquidate their portfolio. Okay. So I know that's coming. So I don't know when, but I'm only going to buy one at a time because I'm still scared. I'm not like you buying 7 units at a time. Not yet. I'm not that brave.
Yeah.
But you've definitely been way more bold than I have with investing.
It's just that
new construction in a different state is it's your mindset. And even though I'm helping people do it, it's
having faith and belief in yourself. Because I know, I was as scared as anyone. I'm like, I'm going to just try to work my way up the corporate ladder. Yeah. I'm going to invest in a 401k, max out a Roth every year. I'm going to try to just do those things and get to retirement. But, you realize that this was another thing for me. Let me ask you this question. Do you know anyone that, would be, that's rich, that's wealthy, right? That doesn't own any real estate?
Yeah.
I don't know. Me personally, I don't know anyone. Maybe some of the customers that I have had.
It's insane.
That's the case. But I mean, it really is, and I think that was something that really, hit. I had read a quote that had said that, and it's like,
it's not normal. This is a rare, this person, they're very successful and they rent everything.
Yeah.
Yeah. I can't relate to that at all. To me, it's like so much like missed opportunity, because if you have that liquid,
They rent out houses, or do they rent?
They rent where they live.
Is it a multi-unit?
No,
Wow.
they rent out like a couple of single families.
Yeah.
In multiple states.
Right.
And I'm like, well, you're making someone else richer.
Yeah.
You know?
You really are. You're not benefiting from all the benefits there.
It was wild. I'll give you an example. So like one of the houses that this person was renting, the rent, he moved out of it. It was like $15,000 a month.
Yeah.
And then because of the nature of the market, he moved out of it. I think they raised it to $25,000.
Wow.
He was in there for so long, so they raised it to market value, and the market rent was $25,000. Orange County.
Oh, there you go.
Yeah.
Yeah.
And it rented like that. It was done. It was like next day. I'm like, that's why I got my license in Cali, because eventually I would love to. My goal, I don't know, you could talk about your goal too, but like my goal was to have, I want oceanfront property. California's a whack state, but I want oceanfront property in Newport Beach. Like that, it's just beautiful. The landscape is just gorgeous. And until I'm exposed to a more beautiful landscape, which to people who have traveled, they're probably like, you have no clue what the Amalfi Coast looks like. But,
I've never been to California.
That's my goal. I mean, right now, you would probably lose your mind in Los Angeles, but Newport's not like LA.
Yeah, that's right. That's right. Yeah.
What's your end goal?
I guess I'm such a competitor, and I'm a big Conor McGregor fan, and he's known to say that, look, your biggest competition is yourself.
Oh, yeah.
And I guess I challenge myself daily. It's ultimately about financial freedom, and it's not about, to me, it's like, okay, I'm not about like, I just want to accumulate as much money as I can. Like, I'm not going to die with it,
Right.
But it's time. My goal is time. It's being able to spend more time with my family and my friends,
and take care of them, and
be
because you
able to
can
create a legacy. Yeah, and ultimately, you have these properties, and we'll touch base on, in later episodes about being able to buy properties and defer your taxable gains.
I was going to ask you about,
frankly, to death.
Oh, really?
You could do that, in a state, and you start estate planning, and guess what? When you die, your taxable obligations die as well.
Really?
You're able to pass that on to your.
Can you avoid an inheritance tax?
Can you avoid there's ways around it. There is.
Okay.
Absolutely.
I've heard people like deeding properties to different people.
You could so again, that whatever the taxable obligation is on those properties, when that when that individual passes, so does that taxable burden. And that the heirs of that property or that estate are going to get that step up in market value too, whatever that property's worth. So it's, again, I don't want to get too much into the weeds because we're talking about just
this is like
buying. Yeah, this is episode.
But what's your
50.
goal? Like, where do you? I know it's time. Like, I see myself being young, enjoying California.
Yeah, right.
Where do you have like a geographical location? Like, where?
Well,
do you want to
be? I guess the Airbnb model, the short-term rental model, intrigues me because, again, once you have the time, it's like, okay, I want to be able to go to different states to be able to enjoy my properties, and also be able to provide individuals with vacations and memories, and enjoy that. I find that very fulfilling.
Okay.
When I get messages from people and renters down at, whether it's Ocean City or down in Madeira Beach, just conveying and expressing how much fun they've had. The place is beautiful, So my next goal is I want to start transitioning into large multifamily. 100
like 10 units.
units.
Oh, 100.
100 plus units, 200 plus units. Those are things that, again, when you're talking about cash flow, percentage wise might not be as good as the smaller multifamily, but in terms of appreciation, you're able to, maybe fix some of those units up slowly, and next thing you know, you're able to, sell that off or to cash out of that, and you're talking a way bigger number.
Yeah.
And that's my next goal and challenge to myself. So I think that there's no quantity. I don't have a quantity or anything like that, but ideally, I don't see myself staying in corporate America forever. That's for sure.
Yeah. It's more like having, like you said, time and the freedom to choose if this is what I want to do today or if it's not.
Sure. Absolutely.
Yeah, I think that's my goal too. It's obviously like freedom and being able to not worry and enjoy and actually live life, because living with certain conveniences are very expensive, and the only way to do that is to make money and to make it fast.
for sure. You know, and I think that life's too short, you know, to for the 9 to 5, in my opinion. I think that it's a necessity, you know, for the overwhelming majority of people, and quite frankly, including myself, you know, as a sales rep. But I think that you could get out of that rat race, quite frankly, which is ultimately what it is. You know, you're fighting for, you know, to make, you know, more money per hour, or for your raise that, quite frankly, your boss might have said, well, next year we're going to get it. You could give yourself a raise through real estate very quickly.
Ooh, I like that.
You know, and I think that that's ultimately, you know, the name of the game. You know, instead of getting 1, 2, 3% annually on whatever wage you're getting, you know, how about give yourself a $10,000, $12,000, $15,000 raise that year?
Yes. I'm so motivated right now. Like, I have my computer right here. I could open up the MLS and buy something. That's what I would like to. Yeah. I would like to do it in real time, like show, like, because you're going to have transactions in the future.
Sure.
So we could show, like, our transactions in the future in real time.
Right.
You know, like what happened this week.
You know, how I'm doing the analysis, you know, whether I think it's a good property. Maybe we pull up some different properties and show, you know,
comps.
different markets.
Yeah.
Comps, you know, you could pull up, you know, maybe some things, although you were doing off-market deals, looking for maybe potential flips, you know, what you're looking for, you know, based on that. And again, I think that, you know, the goal here is to help you all to take that first step. Feel confident enough to take that first step, and equip you with the tools and information that you need to be able to do that, you know, because it's all going to start with that. You know, DMing me is great, you know, and I'll gladly, you know, help whoever, you know, needs the assistance. You know, it's how I learned. Yeah. You know, and I'm sure that's how, you know, you've had your mentors along the way as well that have done that for you. But just
asking, like, general, like, curiosity and asking questions and being grateful to people actually being giving with their time. And I think that's what we're willing to do. We've been doing it already, so we might as well just keep doing it and widen our spectrum.
This thought just actually crossed. Do you remember your first transaction as a realtor? Were you nervous?
Oh yeah. I didn't know what I was doing. I remember, all right, here's a funny story. And I'm sorry that if you hear this, I doubt he will. But so I had my first listing, and it was in Newcastle, and I'm not going to say where, but his house smelled. And I had to tell him that his house smelled like dog. Yeah. And I can't smell. I don't have a sense of smell, and this is like my whole life.
How'd you know it smelled?
Because the agent told me. So I had it listed for sale. Yeah, okay. And it never did sell with me, but anyways, I had to tell him that his house smelled like dog, and he hung up on me, and that was my first deal with real estate. Wow. Yeah.
Jeez.
It was not successful.
Well, did he clean
but
the
I
smell?
Didn't stop. What?
Did he clean the smell? What did he do?
I don't know. He hung up on me. And
so
he's like, I don't.
That was it.
It was kind of like, it kind of bothered me all day, and we eventually spoke again, but never about the dog smell.
Yeah, right.
So and then so my first clients was an investor from Massachusetts, because we had like a New England rush. Like, people were buying properties like crazy in Newcastle, and she maybe put 30 offers in one day, and that's how I memorized the contract, because I did it by hand. I filled out every term by hand. No kidding. 30 of them. 3 got accepted, so I was like,
you're gonna get carpal tunnel.
I probably already do.
Probably already
yeah,
have.
I type things now, but yeah, that was it.
That's true.
Anyway, so I think that's a good way to end, and maybe pick a deal in real time to showcase next week.
Sure.
And hopefully get some questions and generate some interest and go off of that. So we don't have a name yet. We're going to call it, what, Cashed In, I think?
Cashed In.
Cashed In episode 1.
You let us know if you think it's good.
Yeah.
Trendy, if it's catchy.
We'll figure it out.
We'll figure it out.
So thank you for listening, and we'll talk soon.